So I prepare a table, and I've made it. Let's check it one by one. This one I wanted to go slowly, one point by one, just to make you understand exactly how it works. So first of all, let's analyze the income as an employee. Okay, so if I'm receiving income from an employee and I have applied for the NHR in Portugal as a basic one, I'm just an HR without having any added value profession, without performing any added value profession. Even though this employee income is coming from abroad, I will be taxed with a 20% flat tax. Okay, so I won't use the progressive taxation in Portugal, but I will be still taxed at 20%. From the other hand, if I'm NHR full, so I also have a high added value profession, I perform an added value profession, then I will be tax exempt because this income is coming from abroad. Of course, this income should come from a country in which Portugal has a convention to avoid double taxation, and it should not be a blacklisted country. And I'm performing this activity abroad, of course. So that's the reason why we have to make sure to prove to the Portuguese tax authority my intention to live in Portugal, but not necessarily my physical presence in Portugal, because in order to be tax-free with this type of income, I have to perform my employee activity as a added value profession abroad in another country, okay? And maybe this country will withhold some taxes on my payroll as a non-resident. And of course, there is some taxes to pay abroad, but nothing in Portugal. In Portugal, will be tax exempt. So this is, and here I want to break down some misconception of the NHR Portuguese regime, is that you're not completely tax-free, because if you're receiving income from a country that anyway withholds some taxes for non-resident, you're not tax-free. In Portugal, you are tax-free. When you are a fiscal resident in Portugal, you will be taxed on your worldwide income. But since you are under NHR, the worldwide income is not taxed in Portugal, but maybe in the country where the income is generated in the territory. You went there, you physically work there, so you're generating income in that specific territory. And there you probably will be taxed. So we have to check the convention between Portugal and that country and see how that country from which you're producing the employee income, how tax your employee income, how withholding tax for non-resident, because you are a resident in Portugal. For the employee instead, if you work in Portugal, so you can be an NHR basic in Portugal and you produce income there, then you will be taxed at the progressive tax rate, unless you are part of this professional added value list, and then your taxation is 20% tax, okay? So it's a kind of level, as you can see in this table. If you're a added value professional, if you work in Portugal as an employee, you will be taxed at 20%. But if you perform this activity abroad, it's tax exempt. Instead, you can be still an HR, but if you are not if you don't belong to the list of high added value professional, then in Portugal, you will be taxed at the progressive tax rate, and abroad, if you're working abroad, at a flat tax of 20%. What does it mean? It means that Portugal taxes you at 20% flat tax, plus what you have already paid in the country as a non-resident withholding tax. And this is something that you have to check with the convention to avoid double taxation, to see if this NHR solution works for you, in case you're not added value professional, okay? So here you have to be very, very, very careful. The second point is when you are self-employed. Okay, the self-employed work exactly, more or less in exactly the same way as an employee. The only difference is that if you're an NHR basic, so if you don't perform any added value professional, you can be either taxed optionally 20% or with a progressive tax bracket. Otherwise, you will be tax exempt if you fully respect NHR as an added value professional. Otherwise, if you perceive self-employed income in Portugal, then you will be taxed a progressive tax rate or a 20 flat if you fulfill all the requirements of NHR. Okay, so that's very easy. Be careful, because when you are self-employed, you have two options. Either you become self-employed using a VAT position recorded in Portugal, and then you have to also pay social security in Portugal, because the employee instead is your company that pays in your behalf the social security. But when you're self-employed, you have to provide yourself to pay your own social security. And when do you pay it? Of course, if you're set up in Portugal, you have to pay the social security in Portugal. But since you are working under NHR, might be the chance that you are performing an activity as a self-employed, which is more a rare case, but a self-employed activity can be performed abroad with a VAT registered abroad, and then you might already pay the social security in the country where you have set up the social security, set up your VAT position. And then that's why I put the asterisk. It means that this income, if is already subject to the social security contribution of the country, you pay only there the social security and not in Portugal. This only when it's coming from abroad. But again, to be considered a foreign self-employed income, you have to work really abroad. Okay, so you have to apply the NHR, proving the habitual adopt and not stay physically more than 6 months in Portugal. Otherwise, you are faking to be self-employed abroad. Okay, so be careful about it. And then there is another point, a second point, very, very important. Important is that either an employee or a self-employed, you can be an administrator of a foreign company. And this makes the whole difference in this world, because basically, if you're running a company as a manager of this company abroad, you theoretically could be, this is for sure a foreign income source, because the company is set up abroad, maybe in a jurisdiction where it doesn't tax anything, like at the level of the administrator, at the personal level, at the corporate tax level. And this means that basically you potentially be tax-free, but you have to make sure to run this company outside Portugal. Because it's true that maybe the Portuguese authority then don't really go after this, but they might consider your foreign company as a Portuguese one, okay? So you have to be careful that the place of effective management of that company, it's run abroad. So again, you have to apply for the NHR when you prove to have the habitual adopt, but you don't have to stay more than 6 months, because the majority of the time it has to be spent outside Portugal to run your company from abroad and to prove to the Portuguese authority that you are an employee, self-employed, of a foreign source income and not from the Portuguese source of income, okay? And then you can run your limited company in UK, you can have your LLC in United States, you can have your S Corp, you can have any other company in whatever jurisdiction in Europe. But those companies has to be managed outside, to be on the safe side, have to be managed outside Portugal. And then we can, of course, thanks to this schema, you might have, your company, in any country where the corporate tax is minimal, or the LLC in which you have the pass-through system. So the LLC for the Portugal authority is considered as a normal company with a corporate tax at dividend level. But for the United States IRS point of view, the LLC, it's pass-through company. So the money comes straight to your physical person. So they are not taxed in the US, are not taxed neither in Portugal. Of course, if you make sure that you, as a US citizen, if you have the chance to apply for the earning time exclusion. Okay, this is something that has to be checked case by case, because of course, here I'm just referring to US citizen, but also if you are a UK citizen, you can apply your limited liability company in UK, where dividend for non-resident are zero taxed in UK, and also are not taxed with the NHR program in Portugal, and that will be the maximum optimization that you can have, okay? For everything more in details, you have to contact us to check your personal situation and see how we can combine correctly the NHR program with your foreign structure, with your foreign situation, okay? And then, of course, besides the employee and the self-employed income, we have also the real estate, the capital gains, the royalties, the dividends, and interest. So here's the following. It works like this. If you have real estate, capital gains, royalties, dividends, and interest from abroad, from a source, foreign source of income, they are tax exempt in all the cases, except if this income is coming from a blacklisted country. So in that case, you are not respecting the full NHR, so you are in the basic, because as we said before, the basic is also when you have, not just when you perform an added value profession, but also when you have a blacklisted country source of income. So if this is the case, you will pay 35% flat tax, okay? So be careful. And then if your capital gains, real estate, royalty, dividend, and interest are from Portugal territory, then you pay 28% for these three, royalties, dividend, and interest, but you can optionally pay 28% for the real estate and capital gains, or alternatively, 50% of it, of this income, is tax-free, and the rest of the 50% will be fall into the progressive tax rate of Portugal. Okay, so these are the two conditions. Another thing that I want to mention is the following. Here is the list of profession that are considered from the Portuguese tax authority as added value. Okay, so as you can see, it's a lot of it's a huge list, and you can basically easily fill up in this list. You can be part of one of those categories. As you can see, you have also the most generic categories, which are managers. But you get, of course, you can be manager of your own company, and so you can perform whatever activity in your own company and consider yourself as a manager. This means that administrator of the company most likely can be part of the NHR program. A lot of digital nomads, a lot of content creator, YouTubers, e-commerce dealers, these kind of new jobs are always part of this NHR scheme quite easily. And just to be a little bit more complete in this video, I wanted to show you how it works, the progressive tax rate in Portugal. As you can see, Portugal has a quite high taxation in normal cases for an ordinary Portuguese tax resident. This is a tax rate of 2022. They start from 7,000 euro. You already pay 14.5%, and then it goes immediately up to 23, 26, 20, 28% taxes with only 19,000 euro more or less a year, and then immediately goes to 48% taxes at 75,000. So, of course, if you become an ordinary Portuguese tax resident without any HR option, is not convenient at all because the taxation in Portugal is quite high. Be careful about if you're managed to apply the NHR, which is quite easy if you didn't live in Portugal, but you have to make sure to be in the NHR full. So it means that you have to receive income from a foreign country which has an agreement with Portugal, let's say a double taxation agreement, and mostly important thing is that you have to perform a profession as a high added value. Of course, you can also move to Portugal and apply for the NHR basic with the just foreign source of income only because you have real estate from abroad, for example, or from dividend. I just give you a quick example of how we can structure your tax planning. You can have dividend from UK, which are not taxed since you are moved to Portugal and UK, you are considered non-resident. Okay, you receive the dividend in Portugal. In Portugal, you don't tax the dividend because it's coming. UK is not a blacklisted country at the eyes of Portuguese tax authority, so it's fine, tax exempt either in UK and in Portugal. But there is, for example, if you have a real estate income because you have some property under rent, maybe you're not aware of that in Belgium, you can have your real estate under rent, your residential property, unfurnished, so without any furniture, tax-free, if you are not resident, under a certain limit. So, and then you can also receive from Belgium tax-free income, which is also tax-free in Portugal. So dividends from UK, real estate income from Portugal, royalties from another country that gives royalty for free for the non-resident or almost tax-free. So as you can see, the trick here is to analyze your personal situation, understand in which country you have your foreign income, and see if the Portugal jurisdiction is the best solution for you, if the NHR solution works for you. If you are, for example, a high net worth individual, maybe the Portugal is not so good because you have to deal with this NH full, you have to move to Portugal, go there, proof, purchase a property. Maybe you would like to have another country, which is Italy, and Italy has a better option when you're a high net worth individual. If your foreign income, it's like million of euro, then you in Italy have to pay only 100,000 euro as a fixed tax, and then all your foreign income is excluded from taxation. So you see, we have to always analyze your personal situation, combine the best of the tax strategies that we have in this jurisdiction in south of Europe, make sure that you can improve your taxation, and sometimes a jurisdiction that at the eyes of most of the people think it's the best solution possible, sometimes is not the best solution for you. Okay? For anything else, subscribe the channel, ESENtaxa, the notification bell, like button, because in this way you will be always updated for free about the Italian fiscal system, the Portugal fiscal system, Belgian fiscal system. We are going to explore more and more jurisdiction. We also have tried to see If a certain jurisdiction is not working, we are going to consult our clients to move towards different jurisdictions. And that's it for today. Thank you, and see you next time. Bye.